The passage of the Genius Act to regulate stablecoins in this country was a big win for crypto firms. But our next guest warning that the legislation could increase Americans' trade deficit and hurt small American businesses. Joining us right now is Rohit Chopra. He's the former director of the Consumer Financial Protection Bureau. Tell us your litany or list of issues that you have with the Genius Act and what you think the true implication is.
Well, we all want there to be faster payments. We want there to be better innovation when it comes to paying people for services. But we also want those payments to be safe. We want, when there is a failure, for consumers and businesses to be able to be made whole. We also want to make sure that banks continue to have a reserve of deposits to be able to lend to Main Street businesses. And what we see in the Genius Act is essentially the creation of a new type of bank charter, a tokenized money market fund that I think will have some real implications that are far beyond crypto.
Give me some examples.
Well, I think you hear Scott Bessent talk about that he wants to stimulate trillions of dollars in demand for treasuries by having more U.S.-based stablecoins. You know, where is that demand going to come from? In many cases, it will move from the commercial banking sector. That means that those, what money market funds issue, that's going to take away from some of the bank lending that is so critical to the economy. We also know that money laundering is a key part of the U.S.'s power as the reserve currency, using our sanctions to stop terrorism financing, to stop and respond to those countries that pose a threat to us is powerful. And anything we do to undermine that may actually be harmful to the power we have as the reserve currency.
Rohit, I looked through your list of concerns. I will admit some of this makes me a little uncomfortable. I want to see through it, but it just looked like you threw up a laundry list of 50 million things that could go wrong, including it's going to draw people from overseas, which will make the dollar stronger, and that's the opposite of what the Trump administration wants to do. I mean, I think all in all, the idea of getting more buyers into treasuries would be a good thing. It would be a good thing for the economy overall because it would keep rates down. It would allow more U.S. taxpayer dollars to go to things that matter instead of paying off interest. I mean, there's a lot of good things that could come out of that, too.
Well, you know, we all talk about this, that, yes, stimulating demand for treasuries can lower particularly our long-term borrowing costs. But really, where is that coming from? We want to think about where would those dollars be elsewhere. And in many cases, we see that it siphons money from commercial banks. And again, commercial banks continue to be a place where most farms, most businesses still continue to get credit. I also think, Becky, we want to make sure that digital technologies don't totally get hijacked by one or two or three players. The Genius Act does allow big tech companies to issue stable coins, use that as part of their business model, potentially track payments across their ecosystem. That's kind of what we see happening in China, and I would have liked to see much stronger protections when it comes to consumers and to our privacy. But look, this bill is passed. We are going to deal with some of the implications, and everyone needs to watch what the regulators are going to do to implement it. But unfortunately, many of the regulators, like the agency I ran, is essentially now a dead fish, not really doing anything to enforce the law. So I do think we have some real problems we're going to have to look out for.
Can I just go back to the Treasury issue for a second? There's an argument being made right now that actually the demand for Treasuries is about to get very interesting because of all of the folks who are going to end up ultimately having to buy Treasuries to back the stable coins, and that they could those buyers effectively could make up for whatever you think the lack of buying might be from China. Some people would say that's a good thing. Is that a good thing?
Well, you know, we are all trying to look closely at what's happening in our treasury markets. It has such a huge impact also on our fiscal situation. But a lot of the predictions that people have been making about demand for treasuries are quite uncertain these days. And look, I do think we have to make sure that the country is on a sustainable fiscal path, that we have a way to keep the Treasury markets liquid. I just think we have to make sure that where we are stimulating demand, we understand the consequences that if you're taking it out of banks or taking it out of other sources of financing, that could have some real crowding out and implications on the real economy in the U.S. too.
Hey, Rohit, let me ask you a separate question. There is a move afoot, and we talked to the head of the SEC yesterday about this, potentially to allow more private investments to be inside, wrapped inside, if you will, 401ks. How do you feel about that?
Well, look, 401ks have been a real mixed bag from a policy perspective. We have an enormous amount of undersaving in retirement plans, but we also have very, very high fees. So I do think that while there are some ways that consumers, savers are able to get different exposures to different asset classes, it often leads to huge harvesting of fees for investments that people don't really understand. So I do think there's a lot we have to do to make sure that retirement savers have some access to plain vanilla products that over the long term are going to serve them well. We see study after study that shows those who simply put their retirement assets in a diversified portfolio end up beating most other savers.
What do you make of the viewer who's watching you now and who says, look, the only real way to make big money, the way a lot of the people that we talk about, the CEOs and entrepreneurs in this country have made big money, is to get into early stage private companies. They want access to things that sort of have a shoot the moon kind of approach to them. And that by preventing folks that may be considered historically, quote, unaccredited, meaning people who are not already wealthy, that we're preventing people from having access to the American dream.
We've heard this argument a lot. And I think going back to even the gold rush, where people were often sold opportunities to make big money quickly, I want people to be able to invest in awesome businesses that can create a lot of good for our long-term economy. But I also, as you know, Andrew, have seen a lot of scams, fraud, and abuse. And that's kind of why we need basic rules of the road that are actually enforced. I think one of the reasons the U.S. capital markets are some of the best in the world is because we have those rules, not because we constantly turn a blind eye.